all love a good fight, especially when it involves bolshy asset managers. This is Tonight. I'm Bruce Whitfield, and tonight I'm joined by Cas Coovadia, the Managing Director of the Banking Association of South Africa. He is in our Joburg studios, and Andrew Canter, the Chief Investment Officer at Futuregrowth. He's in our Cape Town studios to find out what all the fuss is about when it comes to African Bank. There's an attempt to try and change the Banks Act to protect future investors and also, of course, to protect banks from future calamities like befell African Bank. But it's not all going as smoothly as the drafters of the legislation would hope. The Banking Association has been outspoken in its support in changes to legislation. Why, Cas Coovadia?
Well, because we believe that, firstly, legislation is coming at us from Basel, from the FSB, and so on, and it's going to come at us, whether we like it or not, okay? So we have taken the view that we'd rather interact with the regulators, and our interaction with the regulators is a pretty good one, to see how best we manage the regulations that are coming at us. And we tend to believe that it's coincidental that African Bank happened at the time this regulation is coming.
Purely coincidental?
Well, that African Bank happened at that time.
Yeah.
It is coincidental. And SARB was able to apply what in our view is international best practice approach towards dealing with the African Bank situation. And we believe that is correct. And we believe that that is the way to resolve these matters in future, and a resolution regime will be put into place.
But here's the risk that investors who lend money to banks through the bond market run the risk of losing their capital.
But investors also should be looking pretty closely at the investee when they make those decisions. Now, you know, the African Bank situation, we saw a couple of years ago, Allarines came on the scene, there were issues involved and so on. And so these should be savvy investors who make decisions based on risk and return. And one would assume they had taken those sorts of scenarios into account. And at the end of the day, from a banking industry point of view, and let's be clear, you know, it's a broader financial sector, so investors are looking at this in a particular way, and banks are looking at this in a particular way from a purely banking business. The big four banks are in fact, the big five banks are in the resolution equation. They put money behind this, and we feel quite comfortable at the way the Tom has actually handled the situation.
Tom, as in Tom Winterboer, of course, the curator of
and it gives us
Bank.
comfort for the money that our members have put into this.
Okay, so comfort for the banks in this particular case. So what's your view on this, Andrew Canter? Because here we sit with the asset management community going to Parliament, in Cape Town, and saying to Parliament, hold on a second, but this is going to impact the way in which we treat investments into banks, the way we lend money to banks in the future. You are a bond specialist. What is your perspective on this?
So I think we have to be clear what's happening here, and it's happening globally, and it's entirely appropriate. In the old days, you kind of assumed that if a bank was failing, the government, the Reserve Bank, would step in and force a merger or bail it out or keep it alive so that depositors and institutional investors would get their money back. Now, obviously, in the financial crisis, what we found out that there had been this great socialization of losses, even while there was a privatization of gains, and the fiscus and the taxpayer doesn't want to bear that anymore. So the whole global environment, and I agree with Cas, this is an appropriate move to this Banks Amendment Bill to make it clear, to create a regulatory framework for bank crises to be resolved at the bank level without it all falling back on the fiscus to bail out any particular bank, basically saying that investors now will lose money in future bank failures, as we are looking to lose money now in ABLE. In the senior debt case at 90 cents on their end, in the subordinate debt case, they're looking at 0 cents on their end. But that's a debate we're going to get to in a minute. So I don't object to any of that. I think the niceties of it go to the raw powers of the curator to basically do whatever he wants without even talking to the existing lenders, to sell the assets at whatever price he wants, to unilaterally diminish the liabilities, and the only test seems to be, well, I've got to check with the Minister of Finance to make sure that my resolution is fair. So it does give a very broad sweep of powers to curators of banks to do almost anything, and and I think the lenders feel like, well, hey, we were lenders, we're senior lenders, we do have a right to be at least consulted in these matters.
But there's no concern then about particularly the African bank case. You're worried then about precedent into the future and the powers of curators. This time round, it's Tom Winterboer, who's got probably more experience in the South African financial services sector than most people in the industry in South Africa. He's okay. He may be doing the right thing this time round, but what about the future?
Well, let's not play the man, or let's talk about the case. I think the African bank case is very interesting. I think my personal view is, and by the way, everything I say here is my personal view. I'm not speaking for the industry or anybody else. It's Andrew. Well, it's important to say that the African bank was clearly in trouble, and if the Reserve Bank hadn't, my view is, if they hadn't stepped in when they did, in the way they did that weekend, we would all have been facing much larger losses. Now we come along 6 months later and we say, oh, I want my money back, and and the subordinated debt holders are whinging and moaning and threatening legal action to disrupt what is a perfectly reasonable process, when in fact the senior debt holders have been told they're going to get 90 cents on their end, a 10% haircut. The sub-debt holders are fighting for air because right now they're at zero, and there's a real, and they're getting a lot of airtime and they're sucking the air out of the room on this debate. The reality is their money is lost. That's the truth of the matter. The senior debt holders should be made whole before the sub-debt holders, or God forbid the equity, gets anything back. Now, it's a South African solution that's coming. There's probably a compromise there somewhere, but there isn't a lot of compromise. That's the reality of capital structures and the risk one takes when one lends to banks now and in the future. This is the reality of lending to banks.
And Stuart Theobald made the point in Business Day just this week, saying that this could be a model for the future in terms of the way in which banks are bailed out in the future, Cas. I mean, there is a level of South African innovation which comes to the fore in times of crisis everywhere except in Eskom, it would seem, at a time like this.
Sure, and it's a question of, and is it a bailout? And the term bailout is associated with what's happened in Europe and America. Here, I think what Saab has done is to say taxpayers are not going to pay for this thing.
And why should we?
Why should we? Exactly, and I agree that taxpayers shouldn't be paying for it, and so it's a responsible resolution of a situation that has occurred. And I think that's the way we should be going in future. With regard to the curator's powers and so on, I think that the whole resolution regime is still being negotiated. There will be a white paper sometime in the next few months on which comments will be asked for. I wasn't in Parliament when the Treasury heard on this bill. Some of my people were. I am told that the curator's representative, they said that they have to actually abide by the Public Administration and Justice Act. The chair of the portfolio committee has told the asset managers that you guys have ideas, well, come and present those ideas to us. And I am told on good authority that the curator's representative said, we'd like to hear these ideas. Okay, so it's, I think that there is an ongoing debate on this, there's an ongoing process on this. And I think that we need to arrive at a situation that gives the different players here the confidence that we are going to move forward into these resolution regimes in a way that does not actually compromise confidence and compromise the ability of investors to lend to banks.
Does that achieve that though, Andrew Canter? Because let's say, for example, and I mean, let's not tempt fate here, for example, but that it was a Nedbank, a Barclays Africa, a Standard Bank, or a First Rand that got into trouble. The consequences of this sort of intermediation by the regulators and also by the curator would be far bigger and would have far broader consequences. Is there a concern that future lending to the banking sector is going to be affected by this?
Well, sure. I mean, that's the big sea change, isn't it? Is that post-financial crisis, we've been contemplating and discussing this new regulatory regime where you realize if you make loans to banks, you are taking more risk than you used to. That's why the credit ratings agencies have downgraded banks, and that's why banks' cost of funding is already rising, and for term debt is going to continue to rise. I'm sorry, Cas, to tell your members that, because the reality is, it's a riskier thing than it used to be. So okay, so be it. Banks do fail. They have their business. They have a life cycle. They run geared balance sheets. Sometimes they take undue risks, so new regulations will prevent that. And I want to be clear, South Africa has a really well-regulated banking industry and deserves to have high exposures in funds. But I must tell you, when I look at the Reg 28 limits or the unit trust limits in funds, up to 100% of a pension fund can be exposed to just 4 banks, up to 100% of a unit trust fund exposed to 4 banks. And we raised this with the FSB at the time, but they wrote Reg 28 and the unit trust regulations, and they weren't ready to deal with it. They must deal with this now. Those exposure levels are just far too high for commercial, market-facing, competitive businesses taking risks.
Absolutely crucial point,
changed.
Andrew Canter.
So the answer
sorry, Andrew.
Yes. Funding rates are rising.
Funding rates are rising. How does this then affect the sustainability of Good Bank African Bank, the bank that we were told by Tom Winterboer that he would be able to relaunch by the middle of February? We are a couple of days away.
Are you asking?
I am asking you, Andrew Canter.
Okay, so let us assume that we get through this process. The good assets can be sold to the good bank. The good bank receives new equity capitalization as the banking sector has been sort of had their arm twisted or whatever's happened to get them to fund that equity. And there's a book there, there's clients there, there's branches there. It probably should be a sustainable enterprise. In fact, I would venture to say that if it is not going to be a sustainable enterprise, it will not happen because nobody's dumb enough to launch an enterprise that is doomed to failure. We cannot afford that in the country, either financially for the investors or politically for the SARB and the rest of us in the market. So it can be done. The assets are there, the clients are there, and the capitalization is available. We have to get through this process of moving the assets over, of dealing with the existing creditors of ABLE, because frankly, you can't enter into a new bank if you've got the risk of the old lenders suing you for the assets. It's just an untenable situation, hence the Banks Amendment Bill.
Andrew Canter, thank you very much. Cas, African Bank can't get on with its life until this is put to bed. Is there a risk here that we delay African Bank into obscurity?
No, I don't think so. I think that I agree that we do need to deal with the two together, and I think that part of actually finalizing a new bank and listing it and so on has got to be the curator dealing with the situation, and I have no doubt that he will allow the asset managers to actually put a proposal on the table and discuss this with him. So, you know, despite all of our fallacies sometimes, I think we will get there. And I'm quite confident we will.
Cas Coovadia, thank you very much. Cas Coovadia, Managing Director of the Banking Association of South Africa, represents the interests of the banking industry. And Andrew Canter, Chief Investment Officer at Futuregrowth, giving us his perspectives, and his perspectives only, this evening on Tonight with Bruce Whitfield. Thank you for watching. There'll be more tonight, tomorrow. Till then, let's find new boxing gloves for next time. Bye-bye.